Hey, have you ever looked at the stock chart and then looked at the same chart a few days later and then said, dang it, why didn't I buy that stock? If you've looked at charts like I have, we've all run into that before. And so today, I want to give you some tools to help you overcome whatever's holding you back from placing that stock trade. Now, before we do that, let's go to some disclosures. And the information that we're covering today is for general informational purposes only, not considered individual recommendations. We will be talking a little bit about options today. Options carry a high level of risk and are not suitable for all investors. Stops are not guaranteed to execute at or near the stop price. Schwab does not recommend the use of technical analysis as the sole means of investment research. We will be using paper money today, and that's just a simulated type of trading platform. There are some significant differences between paper money and live trading. And remember that all investing involves risk. So let's go ahead and jump over here to our Thinkorswim platform. And I want to start off by just talking about a specific strategy. And then as we go through this and look at several examples, I want to talk to you about some of the challenges that I ran into when I first started trading and how to overcome those, which is the important part. And at the end of this, I'll list three things. I'll list three things that you need to do in order to overcome some of that fear of placing orders and trading and investing in general. All right, so let's jump right in. You guys have seen the market probably 2 or 3 or 4 times since this morning when it opened. Hopefully everybody caught James's session there this morning in our ETF, trading ETFs Trader Talk show. Connie just taught the trading a smaller account, and here I'm in advanced charting and want to say welcome to everybody that's here. So again, want to just jump right in. I've got a lot of examples and a lot of things I want to go over together. So I want to go through the chart setup. Now, I'm a little old school. I love the scripts and I love all the new technology and things that we have. I want to take us back. I don't know if you remember when you were in 7th grade, 8th grade, 9th grade, and you're just learning some maybe more sophisticated math and you couldn't use the calculator. At least my teacher wouldn't let me use the calculator. They wanted us to learn how the calculations were done. And then after we learned how to do that, then we could use the calculator. So I want to kind of go back old school. So I'm not going to be sharing any scripts or anything. You guys can take some notes on how to put this together. But our chart setup is what we're looking at first. And I'm going to use my scratch pad up here. I'm going to go through what I like to call a bull flag ATR swing trading plan. Some of you may have seen this before. Barb teaches a variation of this, but I want to go through this together. And so we're going to look at the chart layout, being advanced charting. What things do we want on our chart? And then how do we go through this process? So the chart layout's really simple. We're going to have a 10-period EMA, exponential moving average. We're going to have a 30-period simple moving average. And then we're going to use an ATR. I think Cameron's covered all of these things before in the class, so I'm not going to go into detail of what they do, but that's our chart setup. And I like to use like a 3-month chart when I'm looking through my watch list. All right, so that's the chart setup. Again, you can work on this or just watch what I'm doing as we go through this. But the chart setup is kind of critical. So now the next part of this, if you remember. Back to that first day that you traded. Does anybody remember, looking through the stock and asking yourself, well, should I buy that today? And I remember going through lots of different charts and lots of different things, and I would spend a long time looking at the chart, trying to decide what to do with it. And one of the challenges that I ran into is I didn't have a really well-defined buy signal. So, I'm going to use an example buy signal in all of our trades today, but one of your homework assignments will be to, choose your own specific buy signal. And I'll talk about that as we go through. But like one of the things that was so frustrating to me is I would go through the watch list, I would look at a stock and I think, okay, should I buy it? Should I buy it? And then it would start to move up and I would ask myself, I want to see some more confirmation. I want to see some more confirmation. And then like that 3rd, 4th, 5th day, it would take off like a rocket and I'm not in it. And it was so frustrating. And so I asked myself, okay, well, what does the stock look like before I get the buy signal? Okay, so take some notes here. The setup okay, and I have a definition for this. This is not the only definition, but the setup is what the stock looks like just before giving that potential entry signal. Okay, now the setup, this is the thing, this was like the amazing thing for me when I learned this concept. It's like if you're a baseball player and you're standing at the plate in the major leagues, they throw the ball 90 plus miles an hour, and from the math that it sounds like they have about 0.4 seconds in order to decide whether they're going to swing or not. Now, I think everyone intuitively knows that if they waited for the ball to get to the plate before they started to swing, they would miss the ball every single time. And so this is that concept that in the market, what I was doing is I was going through my watch list as I was looking for buy signals, and I felt like I was always missing it. I was missing my breakouts. I was missing my bounces. I was missing the crossover, all of those different things. So I was introduced to this concept of a setup. The setup is what the stock looks like just before we get that entry signal. All right. And I want to go through the entry signal first, and then I'll talk about the components of this setup. Now, the entry signal that we're going to use for our examples is a Cahold, but there's a little bit of a twist to it. You've all heard of Cahold. Cahold stands for close above the high of the low day, right? You guys are familiar with that. And what we're going to look at is a trade above the high of the low day. Okay, not a close. We're looking for a trade above the high of the low day. So that's our entry signal, is a trade above the high of the low day. All right. Now, one of the things that I think is really important is you start to practice your trading. And you want to practice this. That's why we have the paper money. The paper money is such a useful tool for you to practice and get good. One of my favorite little acronyms is FOCUS. Follow one course until successful, okay? Follow one course until successful. When you pick that entry signal, and there's a whole bunch of them that are valid, okay? I've seen perfect entry signals fail. I've seen lousy entry signals make money. But the point is in order to be a consistent trader, you have to decide what your entry signal is. Now, that entry signal for us, and I see there Dan's got Cahold. That's exactly right, Cahold. The entry signal is a Cahold, and here's the thing. How far above the high of the low day does it have to go for you to take action? You know, what is your Cahold? Trade above the high of the low day by how much? Okay, by how much? Now, in our examples, we're going to use 20 cents above the high of the low day. Okay, that's our entry trigger. Let me move this down a little bit here, over here on my side. Okay, that's our entry trigger is 20 cents above the high of the low day. Now, I can already hear you. It's like, well, what if we're looking at stock like Google, or what if we're looking at a stock that's $300-400? Okay, now it's not 20 cents above the close, it's 20 cents above whatever the high was. So the idea here is when we're doing a bull flag swing trade, we're trying to catch the change in momentum. Now, this ATR plan has a fairly short or small target, so it's challenging. If you miss that entry signal by too much, then there's not enough potential reward in the trade to justify the risk that you're going to be taking, okay? And so, I'm going to use 20 cents above the high of the low day. Now here's the caveat. If you find that your number, whatever number you're using, if you're getting in 20 cents above the high of the low day, 50 cents above the high of the low day, and you always get kind of picked off and suckered into the trade, so to speak, then you may want to change that to 30 cents, 80 cents, $1, whatever it is, okay? But for our examples today, we're going to use 20 cents. All right, now let's go back here to the setup. The setup, again, what's a setup? I want you guys to write this down somewhere if you want to chat it in so it's getting in your brain. But what's the setup? The setup is what the stock looks like just before you get your entry signal, okay, whatever that is. So what components do we need to have? All right, when the pitcher's pitching, he goes into his windup, he checks over at first base, and the batter's already getting ready to swing. I mean, as soon as the ball's leaving the pitcher's hand, he's making that decision, right? So the setup, the first thing in a bull flag setup is we need a higher high. Okay, now what does that mean? Well, a higher high price. So let's look at this little example I have of Google. The stock was down here on the 3rd of June. It rallied up several days and it made a high. Now what we're comparing is this high, is it higher than the last high? And if we take our slide rules out, we can see that 181.11 is higher than it was over here. So we have a new high. Okay, so that's number one. Number two, and this is very common in an uptrend, is you'll see about a 2 to 5 day pullback, 2 to 5 days. So that's part two of our setup, okay? Part two, 2 to 5 day pullback. And then what we want to see is the stock getting down near a support level. Now that might be the 10-period moving average for some stocks. It might be a horizontal level, an old resistance becoming support, but that's an important component here as we get ready for this, okay? Near support. These are, again, the setup criteria, and there's one more. Now, the next thing, and this for me, when we're talking about trend, is so critical, is the current low, that low of the low day that you're looking at needs to be a higher low. James Boyd has done a number of different great trend trading sessions on trend and identifying the trend. And we all know the definition of an uptrend is higher highs and higher lows, right? So what we need to know then is the current low, the low of that low day that we're looking at in the pullback, is that a higher low? Okay, higher low. All right, these are the setup criteria. All right, now, any questions about that? So we have our chart layout, we have our setup, we know what our entry signal is, and the rest of the time, I just want to go through and give some examples. All right. Okay, so we're good to go here. Now, the very first thing I want to do is I want to do a back test with you guys together. And so I need you guys to participate here in the chat. I need you to start saying things, you know, in the chat. So I'm going to go to my chart here and we're going to take a look at an example. All right. Now we're on the Disney chart and this is back in time. We're back here about the 23rd of May, so not too long ago. And so I have some questions for you. And again, I want yeses and nos. These are going to be pretty easy questions. Okay, is the current high higher than my last high in the trend? Okay, I would say the high is up here on the 16th. Is that high higher? Okay, somebody chat in something. Okay, is it a higher high? And we're going to check these off, right? I have a higher high. Now, what am I looking for? Now, let's take a look here. Let me go back in time. Let's zoom backwards just a little bit. And as the stock is at a higher high for this particular plan, now this may not be the same for other plans, but for this particular plan, what's the next step? What's the next step we're looking for? Hey, I've got a higher high. This has been making a higher high for several days. I'm looking for that pullback to start. Okay, generally we're going to look for a red candle. Okay, oh, there's a little doji candle, right? The open and close are really tight together, 4 or 5 days sideways. Oops, didn't want to do that. Let me back up. Okay, the next day, we get this big red candle here on, now we're at the, what day is that? That's the 21st of May. And what's the next part of the setup? What's the next part of that setup? We have a higher high. We're looking for a 2 to 5 day pullback. What's next? What's next? I need you guys to participate here. What's next in the trend or next in the setup? Okay, near support. Now, what is support? Well, we can look at old resistance and support levels, right? We can look at that 10-period moving average and a strong uptrend. That 10-period moving average often will act as an uptrend or a support line. So we go forward. Now, for those of you that have been candle gurus or candle people, one of the things, now giving you a little nuance to this. You know, if you're a little bit more aggressive trader, then you could use a different type of entry than this to hold. You could say, well, if I get a bullish candle at support, I'm in. All right. So, you know, as it starts to pull back, let me zoom back in a little bit here. As it starts to pull back as a technical trader myself, I think, okay, great. I would really like to see, in fact, I might even call Disney on the phone and I'll say, hey, Disney, yeah, I'd really like to see a hammer candle pattern tomorrow. There, if you would, they're sitting on that 10-day moving average. I might do that. Okay, I'm not really doing that, but I'm mentally getting ready, just like that baseball batter getting in the box there. He's getting ready to swing before the ball even leaves the pitcher's hand, right? That's what we're doing here. I hated missing that entry signal. It drive me crazy. I would see the setup. I would see, oh, it bounced. I'd like some more confirmation. More confirmation. Then it would take off like a rocket, and I'm not in it anymore, right? So I want to see that. And so in order to do that, one of the big keys is to be able to see that setup and start thinking about what you want to see the next day. Now, we might not get a hammer. We might get a piercing line candle. We might get just a little spinning top there near support. But once we get that, this is the next part. Oh, okay, look here. So we got a gap down on the open. It rallied up, and these candles are kind of scrunched together. If we spread them out a little bit, it'd probably look a little bit like a piercing line candle pattern. Now I want to get ready to do something. Okay, now what do I do? Well, I see the setup. Okay, now this is another little mantra that I like to use. See the setup, place the trade. See the setup, place the trade. Okay, now is that trade going to be profitable? Doesn't matter. Okay, you're trying to develop habits that are effective. James Boyd did a great session yesterday in his trend trading class where he talked about taking action when you see your signal. Okay, well, for this particular strategy, our action is to place a conditional order 20 cents above the high of that low day. So as the stock pulls back and we're near support, the last part of the criteria is higher low. So is this a higher low now, right here? Is this a higher low? And what we would do is just go back and identify where we think the last low in the trend is, that last up and down, up and down, up and down. And this is higher low than any of these previous lows in the trend, okay? So here we are, we're sitting now, and we're ready to take some action, all right? And the action item is to, place an order. So let's go through this. I'm not going to place the order right here, but we're just going to go through the example. All right. So you guys should see the high in the trend. In fact, let me change this, my settings here to a little bit larger font so we can see it a little bit better. Okay. So you guys should be able to see that. What's the high on the 22nd of May with Disney? What's the high? Already see that? The high that day is 111.80. Okay. So if our entry, now again, this is just the entry I'm using. It doesn't have to be your entry. Okay. But if my entry signal, okay, is 20 cents above the high of that low day, the high this day is 111.80. What's the entry trigger? Now, the entry trigger would be 112 even, right? So if I'm placing a conditional order here, and I'm going to show you some examples in just a minute when we finish this one of trades that I placed this morning, actually, and we'll do them all together, okay? But the entry trigger would be 112 even, okay? So here's the question. What happens if I place a conditional? We'll do a buy stop limit order at 112. Now, James has talked a whole bunch about these buy stop limit orders, but if we're just buying the shares and we set an order at 112, what happens? Well, that order just sits there until what? Until the stock goes above 112, and then it triggers that order. And then we buy whatever number of shares we're going to buy, right? Well, so we place that order in there. We'll get to the exits in just a minute. The next day, okay, here's the question. Did the stock order fill? Okay. Okay, and then there's a question there about George. James and I talk about the low days a little bit different here. The low day for me in the pullback is just the day in the pullback that has the lowest intraday low. So like this red candle had a low of 110.13. The next day was 109.98. So, I just look at the lows and the pullback regardless of the color. And I say, okay, well, this is the low day. We're going to place an order above that. Okay. Now the order didn't fill. And now what's this? What's this candle that we have here on our chart right now? That one right there. Let me change this over to be a little easier to see. Okay. Guess what? That's a new low day. So all the work I did yesterday went to naught. Okay. And that's okay. Our order didn't get filled. We place a new order. Okay. What's our entry price? Well, the high of this new low day, you know, we still have a higher high. We still have a 2 to 5 day pullback. We're still we're near support and we're making a higher low. So we see the setup. What's our job? See the setup, place the trade. Okay. That's the action that we're trying to get used to taking. Okay. See the setup, place the trade. So what's the new entry price here? So the high of this new low day is 110.35. Yep, Jay Richardson's got it. Okay, 110.35. So our entry trigger price here would be 110.55. All right, so let's do that. Let's take some numbers on Disney. Okay, this is in the past. We can't do this one anymore. 110.55. All right, now let's get to the next part of this chart setup. Now, where's our target? Well, swing traders, generally when we swing trade, we want to buy at support and sell at resistance. Now, with flags, you have the previous high is the first level of resistance, and then you have a flag target that's usually the flag pole plus that entry price. Now, this particular plan, we're just swing trading. If you're kind of impatient, if you want your trades to be done in about 2 to 5 to maybe 7 days, this is a plan that does that. It has some swing trading characteristics. We buy in the momentum, we sell into strength, and then the stock may go up another few days. That's not our money, okay? Our money is to our target, and then it's somebody else's money, all right? So here's our entry, 110.55. Now, how do we set a target? Now, this is where the name of the plan comes in, ATR. The ATR is, on this particular day, you can see the ATR value was how much? Okay, look at the number right down here, bottom left side of our chart. So if I'm on the page here, my ATR value was 275. So I'm going to put that over here in my entry section. Entry is 275. Okay, now I know all of you here really soon are just going to start yelling at me. The target is 1 ATR above the entry price. Okay, 1 ATR above the entry price. So if my entry is 110.55, where's my target? Plus 275 equals what? That 113.30? I did my math right that day. So you guys check that. 113.30. Okay, now the stop. Okay, now again, remember the stop is just an order that triggers a market order, not guaranteed to fill at that price. Okay, the stop is 1 ATR below the entry price. Okay, 110 minus 2.75. All right, what's that? Let's take our calculator. Let's move that up a bit. Calculator. So we got 110.55 minus 2.75. So 107.80. That's our stop. All right. So you guys are helping me with the math. I see that. 107.80. All right. Now, when you do this, now we can go set up a conditional order, right? And so let's pretend we do that. I'll show you how to do this when we do our real examples, because I want to show you some things that I found last night and I did this system on, and we got a fill on a couple of them. Okay, so I would say I'm going to go do a buy custom with OCO bracket. I'm going to put a buy stop limit order at 110.55. I'm going to put a limit target order at 113.30, and I'm going to put a stop order at 107.80. Okay, and that order just sits there. That thing sits there overnight, and it has a 1-to-1 reward to risk ratio that Chris B just typed in. Now, what's the problem with this? Okay, let's talk about that first, because I know some of you are like freaking out at this point. A 1-to-1 reward to risk ratio means that you need to have either one of two things. You either need to have a method to adjust your stop to change the ultimate actual, when the trade's over, your actual reward to risk ratio, or you need to be winning more often than you're losing. Okay, those two things. Now, I don't want to take time today to go over the stop adjustment rules. I'll mention them, but there's a couple ideas that I can share with you. All right, but here's the deal. We place that order. Okay, now I'm going to start talking about our daily routine. Okay, what's our daily routine when we place this trade? Okay, our daily routine is check your open orders for gaps. Okay, this morning, what did we know? Even prior to joining James's Trader Talks class this morning, what did we know this morning was going to happen? We knew the SPX, the Dow and the NASDAQ and everything else was going to be down a little bit because we could see the futures were down a bit. We could see the market was down. And so, I didn't really have to worry about my bullish orders. I didn't have to worry about gapping over my bullish order. The market was going to open down. But if it opens down and trades back up, which is what's happened today a little bit on a few stocks, then that order would fill. Okay. But we're building our set of rules here that's going to help us become a little bit more effective in our trading. Okay. Check your open orders for gaps. Okay, so the next morning before the market opens and before we go to work, maybe we check the market and see, okay, the market's kind of flat, or if it's gapping up, that's why we use a buy stop limit type of an order. But let me move the chart forward today. What would have happened if I had a buy stop limit order at 110.55? The question is would this order have filled? Okay, let me go through this day, the 27th. The stock opened at 111.03. If I have a buy stop limit order at 110.55, does my order fill? Answer, no. Why? Because 111.03 is higher than 110.55. Now, because it was a buy stop limit order though, hey, bienvenidos a Miami. I see Miami's joined us today. I was waiting for you guys to get here, but looks like Miami has joined us here. Welcome to you guys out there, Ben Watson with his crew, and excited to have you in the house today. We're talking about technical analysis. This is our advanced charting webcast. It's recorded, so you can pick it up later on, but glad to have you here, Ben. Say hello to everybody, and it's a pleasure to be here with you guys. All right, we're going to get back to it. So we just talked about this bounce order filling or opening at 111.03. And then what happened? Well, it went down, didn't it? What was the low? Do you guys see the low that day? The low on this day was 110.15. So when this opened, it activated the buy stop order that triggered a limit order at 110.55 to get filled. If the stock went down below 110.55 sometime during the day, it did. It went down to 110.15, and then at the end of the day, it's closing at 112.36, and so we're up $2 a share. This is why we do this type of order. The conditional order is trying to catch momentum. Now, does that happen every time? Absolutely not. In fact, I've been suckered into these things so many times, which is why we position size over acceptable losses, okay? But the point is we're trying to catch the momentum. Now, the next day, stock's kind of flat. Do we stay in? Yeah. Now, I mentioned a stop adjustment rule. Some traders will just set the original stop, set the original target, and just let it go. Some traders will say, well, if it closes below the low of that previous day, then I'll get out because the momentum's shifting and I don't want to be in the trade anymore, and I'll just take whatever gain or loss I have. Okay. So the end of the day, that low was at 110.15. Someone might say, hey, if the next day it closes below 110.15, I'm out. Okay. We get a little red candle. A little bit of a worry, right? Got a lot of congestion up there. Maybe this is resistance. We don't know. And the point is what do I do? Well, okay, second part of my routine, okay, check for stop adjustment signal, which is basically a close below the low of the previous day. Okay, so If it closes below the low of the previous day, we might move our stop up a little bit. We might say, oh, I'm just going to exit the trade. Okay. Now, next day, stock kind of flat. Again, little doji candle went all the way down to 110.52. So during that day, we were losing about 3 cents. At the end of the day, it's back at 112.02. It didn't close below the low of the previous day, so we just stay in the trade. Now, this is another thing. Put this in your notes somewhere, okay? If you have a set of rules that you have paper traded, please, at least 20 times, then just let the rules do their job. One of the things that was so frustrating to me is I would look at this in 3 days and I'd say to myself, it's not really doing what I want it to do. I'm just going to I'm just going to take my little profit. I'm going to take my little profit at 112.02. I made $1.50 on the trade per share, and I'm just going to get out of the trade. Okay. Did that so many times. And then you guys that have done that, what happens the next couple of days? It rallies up and hits the old target, right? Well, next day, stock goes up, has a high of 113.35. Okay, what happens here? What happened? Our target was 113.30. We made our 275. Now put this in your notes. Please put this in your notes. After you have a stock that triggers your entry, hits your target, please don't throw the stock away. Now what's our job? We just had a profitable trade. What's our job now as a trader? What's our job? Our job is to go back and look for a new what? A new setup. Okay. Now, as is often the case with this particular swing trading strategy, the stock continues to go up a little bit, and that's okay. That's not our money. Okay. All right. So that's how this plan works. Okay. Now, I want to do something with you now and show you a couple things. Okay. And then we're going to come back and do a bunch of examples in our next 15 minutes. Okay. The watch list. Now you can run scans. You can do everything you want here. What's really cool though, is we have a penny increment option watch list. That's a public list available to everybody right here. Now, what does this mean? Penny increment options means that the options trade in pennies, like 31, 32, 33, 34, or $1.34, $1.35, etc. Not $1.30, $1.35, $1.40. They trade in penny increment options. Now, what that usually means, not always, but what that usually means is it's a fairly high volume option. Now, what I like to do is I like to add, 1 million shares. So I might go run a scan, which I'm not going to do right now, but you could go run a scan. You could, scan in the penny increment watch list and then add like 1 million shares of volume. Okay. Kind of cool thing. Okay. Thaya is asking, what does ATR stands for? Average true range is what it stands for. And it just basically tells us how much the stock kind of moves on average. Okay. Cameron has a much more detailed definition than that. All right. Now, in the penny increment watch list, what I've done here is I went through, and let's do this with Google, because this is one of the ones that I did. Okay. Now I want to go through this with you, and then I'll show you the order that I did. Okay. All right. Now let's go through this together. I'm going to shrink up the watch list. This is where I found them in the penny increment watch list. I went through all of them, and I'm going to give you now step number one. One of the big takeaways from our class today is keys to overcoming fear and placing the order. Number one, write this down. Getting to know your stocks. Okay. This is important to me and why I like this old school. I love the scans. And I think after you got to know your stocks, the scans are perfect. But getting to know your stocks, when you first start out, when you first start off with a watch list or whatever, it's kind of like dating. We don't go into a bar or into a social scenario and look across the room and see a handsome man or a great looking woman over there and say, oh, I'm going to go marry that person. We don't do that. We usually want to date a little bit. We want to get to know them a little bit. Well, this is how you get to know your stocks a little bit, as you go through the watch list every single day. Okay. Daily routine, number 2 or 3. Okay. Review your watch list daily for what? What are you looking for? You're looking for setups. Don't look for the entry signal. Look for setups. Okay. Now, as you look for setups, you'll probably find some entry signals, but the point is we're getting ready. Get ready. And you get ready by seeing the setup. Okay. And you get to know your stocks as you go through the watch list. So, you're coming up on your watch list this couple days ago on Google. The very first thing, and this is where I get really excited. Let's go back. What's our setup? Our setup is 4 things: higher high, 2 to 5 day pullback, near support with a higher low. So as soon as, as soon as this thing makes a higher high. Where's our last high? Looks like the intraday high was at 176.77. This is our new high day. So guess what? New high day. That should trigger something for me. Well, here's visual clues that I look for. I look for the 10 to be above the rising 30. When those things are trending together, that generally means the short term and the intermediate term trends are fairly good. Making higher highs and higher lows. Now, as soon as, how soon? As soon as this stock makes a higher high, I start thinking, oh, I'm going to be looking for my setup. What is it? Higher high. What's next? 2 to 5 day pullback. Now, I don't know if this is going to pull back for 1 day, 2 day, 3 day, 4 day, 5 day, 10 days. Don't know, don't care. All I'm looking for is my next little setup. Okay, next day. Candle gurus. Candle gurus. What is this? What candle pattern is that? Piercing line. Piercing line is the other one. Dark cloud cover. Okay, gapped up, sold, closed about halfway through. Dark cloud cover. This is where I start doing the little puppy dance. I think, I've got a new high and I got a dark cloud cover. There's a good chance this is going to come down the next few days, right? So next day, little spinning top. Where? Near the 10-day moving average. What's my setup? Higher high, 2 to 5 day pullback, near support. Now, do we have any idea what's going to happen tomorrow? No, we don't. We don't care. But I could say, well, that's on my 2-day pullback. It's near support. Old resistance is sometimes old new support. 10-day moving average rising. Okay. Near support is at a higher low. Well, I'm going to compare this current low here to my last low in the trend, and I say, okay, I have my setup. What's my job? As a trader, and this is one of my criteria for watch lists, okay? Write this down somewhere. Only in your watch list should you contain stocks you are willing to trade. It is just extremely frustrating if you're not going to trade the stock to watch that stock go up or down, because inevitably, if you don't trade it and it goes up 10, 14, 15, 18, 25, 50%, you're going to be mad at yourself for not trading it. So if you're not going to trade it, don't put it in your watch list, right? It's like having a pool of clothes that you like to wear, all right? So this stock there, we see the setup. What's our job? See the setup, place the trade, okay? Now, again, this isn't a recommendation. I'm just telling you the process that you need to start getting used to as you start getting into trading, okay? And again, please practice this in paper money. All right, you guys help me out. Here we are, Google. The high of that little candle, and this is yesterday, was 176.72. Okay, what's the entry signal? What's the entry signal? The high's 176.72, then the entry's what? Add 20 cents. Again, that's not necessarily your entry. It's just the one we're using for our examples here. The entry trigger would be 176.92, right? 176.92. Now, how's the ATR? 457. So let's do this together. Okay, we know the entry price. Entry price 176.92. So we put that in here, 176.92, and we add, right? Add the ATR value, which was what? The ATR that day is 457. So 4.57. And this is our target, 181.49, right? And then where's our stop based on the rules that we went over together? Okay, we take our entry price, 176.92 minus that 457. And we're at 172.35. Okay, I just wrote those on a piece of paper over here. So now what do we do? Well, we go place the order, right? So we go to the trade page. We right click on our Google. We do buy custom with OCO bracket. Shrink that up for a second. Okay. And we had our entry price, 176.92. 6.92. Now, is that a limit order or is it a buy stop order or is it a buy stop limit order? This is a stop limit. So the stop triggers the order. And then I like to add in about 10 cents. You can use other numbers here, but we'll go 177.02. If it gaps up, then it's got to pull back down for that order to fill. Okay, and I usually do these at night when the market's closed. So I'm going to do GTC. We had a target. We said our target was 181.49. Okay. And then our stop, we said 172.35. All right. Now that's our plan. And I did see a comment there about 1.5 ATR. Sure, you can use 1.5 ATR, 2 ATR, 3 ATR. This particular plan is just 1 ATR up, 1 ATR down, and it's a swing trading plan. And like I said, you can use that stop adjustment to kind of adjust that ultimate risk at the end of the day. Again, stop's not guaranteed to trigger at 172.35. It's just a activating order. Now, other thing here, okay? As we kind of get close to wrapping up here, keys to overcoming the fear of placing the order. Get to know your stocks. Go through your daily watch list, looking for those setups, right? Number 2 is get an entry signal. Know exactly what it is you want to do. What's going to cause you to take action. Is it trading above by 20 cents? Is it 50 cents? Is it actually a close above the high of the low day? Are you going to wait until a close? James yesterday talked about in his trend class with that crossover, that third day, I think was what James talked about for that entry. There's lots of different entry signals. There's no holy grail. Okay. Just pick one and be consistent with it. But once you get it, then practice that one. Okay. Now, one of the things that I just was so frustrating for me, okay, let me shrink this back down a second, is when I started trading, I learned this idea of a bounce entry. I learned this idea of a setup, and I thought I had to buy 100 shares. Okay, in this particular case, if we bought 100 shares, the ATR value on this was $4.57. If our order got filled at the stop and not much below that, which is very possible, we would lose $457. Okay. And when you first start trading, one of the things that was so challenging is like, do I really feel comfortable losing $457 or, $1,000 or $500 or whatever anybody tells you you're supposed to use, like 0.5% or 1% of your portfolio? Sometimes that number is high. And here, write this down somewhere. If you are uncomfortable with the risk you are putting on the trade, you will not trade your rules, no matter what they are. Okay, you just won't do it. I've done this for a long time, everyone, and I've talked to thousands of people, and when they're uncomfortable with their risk, they just don't take action. They get that deer in the headlights, right? They either won't buy, and once they're in there and it's falling down, they'll just keep losing more and more money. So the last key, okay, to overcoming your fear of placing an order is this, and I'm putting this all caps: risk less. Let me tell you a quick story, and then we'll wrap up today. Okay, I worked with a guy. He just would not ever place a buy order. He could see him. He learned it. He was a very intelligent man, but he just felt very uncomfortable with risk. And so this is what I did for him. I said, his name's Bob, not Bob, so we'll call him Not Bob. I said, Not Bob, how would you feel about buying 10 shares of this stock? Okay, let's do that together. 10 shares. 10 shares of stock. If we bought just 10 shares of stock and we were risking $4.57 per share and we got stopped out, we would lose about $45. How many of you would be very comfortable losing $45 on your next trade? How many of you would hope that you only lost $45 on your next losing trade? Okay. Well, I don't know what the loss is going to be. And again, the stop order may not get filled. It might gap way down below that. But the point is that if you get to a risk amount that is so comfortable that you don't really care what happens to it, then amazing things start to happen. You start to trade well. You start to follow your rules. and you don't overreact. Your emotions are more stable. Okay. Now in this particular account, I'm risking about $500, and let me just show you. On Google, is that the one we're working on? Yeah. So Google, I actually got filled. We did 109 shares because that 457, 500 divided by 457 was 109 shares. And we got filled at the 176.92, just like the entry price was. And I'm losing some money on it probably. Yeah, we're down about 40 cents. Okay. We're down about $45 on that particular trade. All right. Let me show you another one real quick. And I want you guys to, for homework, to go through the numbers on some of these. Okay. I'm going to pull up ZS. Okay. ZS had the little pullback there a few days ago. Yeah. And the entry price for this particular plan, again, not a recommendation, would have been 303.18. I didn't see it till this morning, so I put the order on. This one got filled earlier today. Okay. ZS got filled 303.18, and it's down about $1, almost $1 a share on 61 shares. That was based on the risk. Okay. Amazon. We did an option trade on Amazon. Let's take a look at Amazon on the setup here. And this is what I'm talking about. New high, little pullback, order filled, but right now it's back below our fill price. And so we're probably losing money on this one too. But again, we're just trying to catch the momentum. Okay. So go through your watch list. You can go this penny increment watch list or whatever watch list you want and look for these setups. Again, what's the setup? Higher high, higher low, 2 to 5 day pullback near support in the middle. How do we overcome our fear? Get to know your stocks by going through that watch list as a daily routine. Look for and identify your personal entry signal. Could be the same as the one we've used here or something different. And then if you're really having trouble pulling the trigger and placing those orders, just risk less. I mean, the fewest shares you can buy is, well, actually it's less than one now, but if you wanted to just practice with one share to get over that fear, then I would recommend you do that. All right. Well, thanks for being here today, everybody. Let me just show you one last little slide today. So here's our market drive is coming up in New York, the 28th. I'll be there at that one. We have some workshops in New York and Chicago coming up. So have a great day, everybody. Appreciate everything you've done today. And thanks for attending. Have a great day. We'll see you.